to talk to us about the Q2 numbers. Anmol, you've reported your highest ever quarterly sales, 1156 crore, 37% up YOY. What's driving this momentum in terms of top line growth? Which segments? Give us a sense. Do you expect to lead growth in the second half as well? And which segment will lead that growth? Give us a sense.
Yes, it has been a very robust quarter for us at Lumax Auto Technologies. I think this is on back of multiple aspects. Number one, quarter two, the demand by itself from across OEMs was very encouraging. Also, the company did introduce a lot of new products and a lot of new model launches in quarter two. Also, on the back of that was the IAC business, which on a year-on-year basis grew quite significantly again because of certain new model introductions during the part of quarter one and quarter two. Also, there is a difference between last year and this year because there was an inorganic acquisition towards green fuel energy, which the company made towards H2 of last year. So on a like-to-like year-on-year basis, that revenue was not there in H1 of previous fiscal year. So for all those reasons, you're looking at a 37% growth for quarter two, as well as for H1. But going forward, I do believe quarter three, we are looking at a similar between a 25 to 30% year-on-year growth estimate. Again, this is on account of certain GST reduction, which has again accelerated the growth and fueled the demand for quarter three. So although Q3 has always been a muted quarter in the industry, this year we do expect a good traction to continue. And for the full year, hence, we do revise the growth guidance from earlier 20% to now close to 25%.
Right. But Anmol, I want to talk about this order pipeline of yours, 1,357 crore rupees, right, as the end of quarter. 40% of it is linked to the future and clean mobility. How much of this is executable over the next 12 to 18 months? And what's the visibility for incremental orders in Q3, given that the new model launches are lined up by OEMs?
So the order book is largely going to be executed until FY28. About 35% of the order book will get into the P&L in FY27, which is next financial year, and almost half of it, 50% of it, will come in FY28. So a significant portion of the order book will get into the P&L by FY28. We do expect out of the order book, almost 40%, as you rightly mentioned, is future and clean mobility. And again, this is completely in line with our midterm plan of 2020-2020, where we do expect 20% of the consolidated revenues should come out of the future and clean mobility bucket. Today, this number sits at roughly about 14%. And with this current order book, we are quite hopeful and confident that by FY28, we should be able to deliver on the 20% future and clean mobility target as a part of the consolidated revenues. We do continue to engage very deeply across OEMs, and there are a lot of new business which is possibly going to get awarded in H2 of this fiscal year. But again, we will keep everyone abreast of these further developments as and when they happen.
Anmol, with GST rate cuts and ongoing premiumization, you stand to gain in terms of volume and value. How is your content per vehicle evolving, and what's the target over the next couple of years?
So the content per vehicle is backed on multiple things. One is the technology aspect. Second is, of course, the whole trend of premiumization. When we started a couple of years ago, going forward on this whole content per vehicle expansion, we were looking at anywhere around 20 to 25,000 rupees on a four-wheeler passenger car. Today, that has gone significantly up to almost crossing the 55,000 per vehicle mark. Going forward, I do expect there is further upside, maybe 70, 80, 85,000 per vehicle, but the rules would be different as a part of the whole tier 1 to tier 0.5 climbing up the ladder for Lumax Technologies, that will actually propel this content per vehicle further creation. And again, as you may have already read and you're probably knowing about it, we launched a software technical center in Bangalore just recently. And the whole idea behind it is to try and integrate our hardware components along with a lot of electric and software solutions so that we can, bundle them up and provide a end-to-end system solution to our OEMs. And that's one of those key strategic aspects how we plan to drive this content per vehicle increase and expansion going forward over the years.
All right, Anmol, we'll leave it at that. We'll let you go on that note. Thanks so much for coming in and speaking with us. And viewers, that time of the show where we bring in the